Hello, friends. Very good evening, all of you. How are you? I hope all of you are doing great. So today, I welcome you back to this free seminar on RTP November 2022. And the focus of the day is accounting standards from Group 2. Accounting standards from Group 2. Okay. So as to enable the participants to have a good session, I request all of you to keep yourself in the mute. If you have any doubts, you can ask in the chat. And while interacting, I'll ask you to unmute and speak with me. That time you can speak. Okay. Otherwise, there is some static, some noise in the background, which I do not want because it disturbs the others. Okay. So the document what you are seeing is nothing but ICAI study material, ICAI from ICAI website. I have downloaded this group 2 advanced accounting RTP for November. Okay. So Aishwarya is saying Sunday also you're taking class for us. Thank you so much for answer. You're most welcome. Huh? Oh, today is Sunday. Huh? Thank you so much. Okay, but after joining CA as a student or after passing chartered accountancy, there is no Sunday, there is no Monday. Okay, we are trained to be machines. So we work like machines and we enjoy that. Okay, the heights is we enjoy that. We'll not feel stressed. Okay, so let us start with accounting standard 4. AS4, contingencies and events occurring after the balance sheet date. Probably the smallest and the easiest standard is contingencies and events occurring after balance sheet date. Okay, which used to speak about provisions, but now there are no much provisions here because provisions were shifted to AS29. So now accounting standard 4 deals only with events occurring after balance sheet date. Contingent assets, contingent liabilities, and provisions, all these things were shifted to AS29. But they're asking one very interesting question. Explain accounting treatment of contingent gains as per AS4, contingencies and events occurring after balance sheet date. The same question can be asked like, explain accounting treatment of contingent gains as per AS29, provisions, contingent events, contingent assets, and contingent liability. So whether you put here AS4 or you put here AS29, or in general you ask the question remains same. You understand? The question remains same. Now you tell me, can I recognize contingent asset? Can I recognize contingent liability? You tell me. Okay, I'm writing here AS29 or AS4, whatever it is, the answer will be same. So what is the, hello, I want you to participate in the chat box. What is the accounting treatment for contingent gains? Contingent assets you call it, contingent gains you call it. So basically contingent asset, contingent liability, I am very sure you know the meaning of it. I might have an asset, I might have a liability, I might have a gain based on certain uncertain event which happens in the future on which I do not have the control. I'm not controlling the event. I do not know. Will it rain today? I do not know. Okay, so Kamachi is saying contingent assets not to be recorded, not to be recorded. Okay. I'll give you one, very clear, a quick understanding of AS29. So here, particulars, recognition, or I'll write recognition here. That means, can I pass journal entry? Can I pass journal entry? Okay, this is one aspect. Second one is the disclosure. Okay, here we have provisions. Here we have contingent assets. Here we have contingent liabilities, contingent assets. Okay, contingent gains are nothing but a type of contingent assets. Contingent gains also will result in contingent assets only. See, for example, if it is going to be a gain for me, which is receivable, that is an asset. Okay, so when gain is virtually certain, accounting is appropriate. Very good. Correct. Recognized as an asset only on receipt, Sri Lakshmi is saying. So you want me to follow cash system here. Okay. Okay. So Guys, is my voice clear? Someone is saying my voice is not clear. Guys, please do let me know. Is my voice, audio, video, everything is clear? Audible, sir. Very good. Very good. Very good. So look here. Look here. Can I pass a journal entry for provision? Yes. Do I need to disclose this in notes to accounts? Yes. Can I recognize contingent liability? No. Can I disclose contingent liability? Yes. Can I recognize contingent asset? No. Can I disclose contingent asset? No. Simple. If you remember this table, this completes your understanding of accounting standard 29. So a provision is to be recognized. That means a journal entry is to be passed. And a provision also is to be disclosed in notes to accounts. A contingent liability, you cannot pass a journal entry because the probability of occurrence is less than 50, mathematically. But in the language of accounting standards, they say the present obligation, the possible obligation, the more likely than not. These are the jargon used there. But basically, the meaning of it is the possibility of occurrence. The probability of occurrence is less than 50%. So there is no need of accounting, but disclose it so that the reader of the financial statement will understand that there could be a possible, liability on the company. When it comes to current assets, when it comes to contingent assets, I'm sorry, not current asset, contingent asset. When it comes to contingent assets, no recognition, and you are not even supposed to disclose the same. You can't say, I have purchased a lottery ticket, I have paid 100 rupees, and the lottery can be 100 crores or 10 crores. Next month, 15th is the lottery date. That day, I might get 10 crores. Pavan sir, can I write this in my financial statements? Are you kidding me? No, you cannot. You cannot. So what is the answer? Contingent gains are not to be recognized. Also, there is no requirement or necessity of disclosure. However, when it is virtually certain, oh my God, one very nice phrase, when it is virtually certain that the entity receives such contingent gain, such amount, then it is no more contingent, and therefore the company may recognize the same. What is this virtual certainty? This virtual certainty, this word is used in 2-3 places of accounting standards. For example, AS4, AS29, AS22, AS4, AS29, AS22. Also, in one part of AS24, you will see virtual certainty. Virtual certainty means almost 100%. Virtual certainty means almost 100%. So we can say that if an event is virtually certain, that means there is more than around 90-95% probability that such event exists, such event occurs. More than 90-95% probability. So what they are saying, if there is more than 90-95% probability, then this contingent gain is no more contingent because it is virtually certain now. Then record. Then record. For example, examples unfortunately are not given in any of the literature. You read ICI textbooks, you read many suggested textbooks, prescribed textbooks by various authors. There is no explanation of what is this virtually certain event. Okay, so example, in case of fire accident, someone is asking, sir, I'm unable to see shared screen. Anyone know how to fix? I do not know, ma. So guys, are you able to see my screen? Remaining people, please tell me, is it a general problem or is it problem of one student? I don't know. Are you able to see me? Yes, yes. Okay, very good. Very good. One student is asking, he can't see my shared screen. I request you, you just Google it or you see how that is to be fixed. I don't know. And some idiot Manish is writing on my board. Let me disable. Disable annotations. Okay, chalo. Anyway, so what is the example for this? For example, in case of fire accident, the company has lodged a claim with the insurer for rupees 1 crore. Can the company pass a journal entry for the same? What is the journal entry? Debtor account debit to debtor account. Who's the debtor here? Insurance company. Oh my God, you're making insurance company your debtor, dude. Debtor account debit 1 crore to, insurance receivable. Insurance receivable. Some crap journal entry. I am making this guy my debtor. Insurance receivable, income. This is asset. This is income. Okay, can I pass this journal entry, guys? Do you think this journal entry has any sense? Do you think this journal entry has any meaning? Or do you think this is crap? Do you think this can be passed or this should not be passed? In case of a fire accident, the company has lodged a claim with the insurer for rupees 1 crore. And immediately the accountant started passing the journal entry. Receivable account debited to income account. Do you think? Tell me. Hello, hello, hello. I'm asking you guys, tell me, can I pass this journal entry? Can we pass this journal entry? No, you cannot pass this journal entry. Why? It is contingent. You cannot pass this journal entry. It is contingent. It is contingent. Now, when this receivable becomes virtually certain, this is the event. This is the point where journal entry can be recorded. Now, on receipt of claim by the company, the insurer appointed one surveyor. The surveyor came to the company and has investigated the fire accident. The surveyor has submitted his confidential report to the company, to the insurance company, to the insurer company. The insurance company, on receipt of such information, admitted the claim of the policy holder and wrote a letter. In writing, the authorized representative of the insurer mentioned that the claim is admitted to the extent of 92 lakh rupees, which will be disbursed to the registered bank account of the policyholder in 7 working days. This is the situation now. Now you tell me, is it virtually certain now? Can I pass the journal entry? On receipt of this letter, can I pass the journal entry? Till yesterday, it is my contingent asset, contingent gain. Today, the moment I received this letter, now even if they go to Supreme Court, they cannot take back. Once it is given in writing that they admitted, unless there is a fraud on my part, insurance company cannot take a U-turn and they cannot say, no, we are sorry, by mistake we have sent that letter. No, you cannot do that. Now it is called virtually certain. Now can I pass the journal entry? Insurance receivable, debited to the debtor. to the income account, P&L. Asset account debit to income account. Can I write? The answer is yes. This is the answer. This is the answer. Okay. So let us read this. So all of you read this para. All of you read this para. So Aishwarya, can you read this para, ma?
Yes, sir. Accounting treatment of contingent gains. Contingent gains are not recognized in financial statements since their recognition may result in the recognition of revenue which may never be realized.
Correct.
However, when the realization of a gain is virtually certain, then such gain is not a contingency and accounting for the gain is appropriate.
Okay, correct. So guys, all of you understand this. Can we go to next question? Can we go to question number 13? We have so many questions to discuss today. Can we go to question number 13? Yes, bolo, and then we'll go. Very good. Very good. So Aishwarya, can you read question number 13 here, please?
Yes, sir. AS5, net profit or loss for the period, prior period items and changes in accounting policies. 13A. Bela Limited has a vacant land measuring 20,000 square feet, which it had no intention to use in the future. The company decided to sell the land to tide over its liquidity problems and made a profit of 10 lakhs by selling the said land. Moreover, there was a fire in the factory and a part of the unused factory shed valued at 8 lakhs was destroyed. The loss from fire was set off against the profit from sale of land and profit of 2 lakhs was disclosed as net profit from sale of assets. Do you agree with the treatment and disclosure? If not, state your views.
So listen, guys, there are two transactions. One transaction, I sold a land which is not invested in the operations of the company. That means surplus land. Is that land my factory? No. So they have a vacant land. So they purchased land sometime back. Now, they are having some liquidity problem. They are selling of this. Okay. And when they sell that, they will get a profit of 10 lakhs. This is one transaction. There is another transaction, which is fire accident in factory. So in that, they lost 8 lakhs. So they have two transactions. What is transaction one? Transaction one is sale of vacant land at a profit of 10 lakhs. Transaction 2 is fire accident and a loss of 8 lakhs. Now the company has set off both plus 10 and minus 8 and has shown plus 2 profit. Do you agree with them? Did they do correct accounting or they are idiots? This is the question. In the question, two transactions are there. One is sale of vacant land at a profit of 10 lakhs. Second one is a fire accident, loss of 8 lakhs. They have set off both and they are showing 2 lakhs profit. Is this correct accounting treatment? Is it acceptable? So as an accounting student or as an auditor or as a chartered accountant, do you agree with the company? Everybody is saying no. No is correct answer. The company's accounting treatment is wrong. But accounting standard 5 deals with how many things? You tell me. I do not remember. I forgot. Accounting standard 5 deals with how many things? 3 things or 4 things? You tell me. 3 or 4? Or maybe 5? 3, 4, 5? So Aishwarya is saying 3. Others are not even responding, idiots. 3. 3, 4, 3, 3, 4. So many variety answers are coming. Shameless people. AS5 deals with 6 things. One is ordinary events. Second one is ordinary but exceptional events. Third one is extraordinary events. Fourth one is prior period items. Fifth one is changes in accounting policies. Sixth one is changes in accounting estimates. Now you tell me, shameless people, 1, 2, 3, 4, 5, 6. How many are there? Sir, when we read the heading, in heading only 3 things are there. So we thought 3 are sorry. Now tell me, AS5 deals with how many things? 6 things. Very good. Now you tell me, sale of asset, fire accident. LKG student also will tell, sir, fire accident and any natural calamity is extraordinary. Oh my God. Sale of asset is? Sale of asset, sale of asset, sale of asset. Sale of asset is ordinary, but based on the volume, materiality, size of the transaction, money involved, recurring nature, repetitiveness of the transaction, it can be exceptional. Correct? Do you agree with me? Sale of asset is ordinary. Sometimes it can be ordinary but exceptional. But nowhere they mentioned that sale of asset is extraordinary. Welcome to ICAI surprises package 1. In this particular problem, they said for the first time, to your surprise, that sale of asset is also extraordinary. Oh my God. But Pavan sir, we read the accounting standard 5. There they mentioned sale of assets is a ordinary event only, sir. Writing down inventory to its net realizable value is ordinary only, sir. All these things they said ordinary, but here why they said extraordinary? When you read the answer for this particular thing, this one they said extraordinary item. This also they said extraordinary item. And this is digestible. This is easy, but student cannot digest this. Student will say, Pavan sir, what is this? Why sale of asset has become extraordinary? Maybe. Why ICI gave this answer? If you do the reverse engineering, it is a vacant land which is not a part of capital employed of the company. It is a vacant land which is not part of capital employed of the company. So that means it is not in operations. It is not in operations. That is the reason maybe they might have told that it is an extraordinary item. Now you tell me, when an item is extraordinary, what AS5 says? What AS5 says? AS5 says, according to AS5, extraordinary items are to be, you tell me, are to be shown separately or can be clubbed with other items? You tell me, are to be dash. So should I show them separately or should I club them with others? You tell me, extraordinary items are to be shown separately. Extraordinary items are to be shown separately. Hey. Who's that? All of you, please keep your Zoom call in mute. Okay. So extraordinary items have to be shown separately. Why they have to be shown separately? So that the impact of such items are clearly known to the readers of financial statements. So you should tell them that this item probably might not recur. This item is an extraordinary item. So you need to show them separately. So here there are 2 items, both of them are shown as, both of them are treated as extraordinary items. Now you tell me, is it proper for the company to net off these two, or do you think they should be shown separately? One item will go to the debit side of P&L as a 10 lakhs, as a 8 lakhs loss, and another one will go to the credit side of the P&L as 10 lakh rupees of profit. So you cannot net off and put 2 in credit. You have to show 10 credit, 8 debit, isn't it? So do you agree with me if I say that both these extraordinary items have to be shown separately? So netting off is wrong. The company has not followed correct accounting. When the company is netting it off, can I say that netting off is wrong? So shall we see the answer? So who will read the answer? Varsha, can you read the answer?
Yes, sir.
Yeah, read more.
As per AS5, net profit or loss for the period, prior period item, and changes in accounting policies, extraordinary items should be disclosed in the statement of profit and loss as part of the net profit or loss for the period. The nature and the amount of each extraordinary item should be separately disclosed in the statement of profit and loss in matter that its impact on current profit or loss can be perceived.
Correct.
In the given case, the selling of land is tied over liquidation problem, as well as fire in the factory does not constitute ordinary activity of the company. These items are distinct from the ordinary activities of the business. Both events are material in nature and expected not to recur frequently or regularly. Thus, these extraordinary items, therefore, should in the given case, disclosed net profit by a setting of fire losses against profit from sale of land is not correct. The profit on sale of land and the loss due to fire should be disclosed separately in the statement of profit and loss.
So this is to be underlined. Both these items are extraordinary. First time when you read this answer, you'll be surprised. Sale of land, my lecturer did not tell sale of land or sale of any asset is extraordinary. Extraordinary, they have given only natural calamities example. Earthquake is extraordinary. Okay, so what are the examples of extraordinary? What are the examples of extraordinary? Tell me. Natural calamities like fire accident is extraordinary. Tsunami is extraordinary. Okay, any cyclone is extraordinary. Okay, earthquake is extraordinary. Then one more extraordinary classic example is there. Refund of government grant. Extraordinary. Attachment of property by government. Extraordinary. These are extraordinary. Nowhere they mentioned that the sale of asset is extraordinary. But in this answer they have given. So please be very careful. If the same facts of the case come in your exam question, you need to mention that it is an extraordinary item. So now you tell me, can we go to next question? Hello, hello, hello. Can we go to next question? Okay, so who will read the next question? Abhinaya, can you read this question? My accounting standard 7.
Sir.
Put a star mark, important model.
AS7 construction contracts. On 1st December 2020, Sampath Construction Limited undertook a contract to construct a building for 108 lakhs. On 31st March 2021, the company found that it had already spent 83.99 lakhs on the construction. A prudent estimate of additional cost for completion was 36.01 lakhs. You are required to compute the amount of provision for foreseeable loss, which must be made in the final accounts for the year ended 31st March 2021, based on AS7 accounting for construction contracts.
Simple problem, but repeatedly asked in the exams. I can't even tell you how many times the same model is given, and it is there repeatedly in ICI study material also. Many problems of ICI study material and the old practice manual you call it, or the suggested answers for previous examinations you see, this model, many times you will get the same model as it is copy paste same. Okay, so now tell me, what is this 108? Abhinaya, what is this 108? Can I say this is contract price? Is this contract price? Guys, can I say 108 is contract price? Correct. Means sales. The company already spent 84 lakhs and is expected to spend 36.01 lakhs in future to complete this. So can I say this plus this both put together will be total estimated cost of completion? Can someone please take this number, add this number in your calculator and tell me how much it is? Is it 120? 84 plus 36. Is it 120? One student is saying 110. How come 110? Right? It is 84, 94. My mind says it is 120. If your calculator says 110, I don't know. 120. 120. Now, selling price 108, cost 120. Is it resulting in a profit or it is going to be a loss? Profit or loss? Loss. How much? How much? 12 lakhs loss. So contract price 120 lakhs. Cost incurred till date. Cost incurred till date 83.99. 83.99. Cost incurred till date 83.99. Okay. Estimated cost to complete contract. Estimated cost, further cost to complete contract. You can say further cost. Estimated further cost. 36.01. 36.01. So estimated cost to complete contract. Total estimated cost. 120. 120. Okay. Oh, sorry. Contract price is 108. Okay, so selling price minus cost price minus 12. This is estimated loss on completion of contract minus 12. Now you tell me, do you think according to AS 7, accounting for construction contracts, do I need to create any provision for this 12? Do I need to create any provision for this 12? Is it required? Is it required? Correct. Everybody is saying yes. Let us see the answer. Let us see the answer. Okay, who's going to read this? Bhargavi. Bhargavi, can you read this answer, ma?
Yes, sir.
Read.
Cost incurred till 31st March 2021 is 83.99. Prudent estimate of additional cost of completion 36.01 lakh. Total cost of construction 120 lakhs less contract price 108. So foreseeable loss is 12 lakhs. According to A7 revised 2002, construction contracts, when it is probable that total contract cost will exceed total contract revenue, the expected loss should be recognized as an expense immediately. Therefore, amount of 12 lakhs is required to be provided for in the books of Sampath Construction Limited for the year ended 31st March 2021.
Excellent. So this is what we have discussed. So everybody, guys, let me know in the chat box. Do you understand this answer? Do you understand this answer? All of you, please let me know. Do you understand this answer? Okay, now, it is not asked in the question. I will take question to one more step ahead. Shall we do one more additional question from the same problem? What is the loss suffered by the company for this contract for the current accounting year? What is the loss suffered by the company for this contract for the current year? This 12 is total contract. No, this year, next year, put together 12. Current year loss. Current year loss. That also might be asked in the exam. Manish is asking, sir, which standard guides provision for bad debts? Manish, what do you think? Guys, Manish is asking one very interesting question. Which standard deals with provision for bad debts? Okay, we'll come back to this. First, let us see this. So let us calculate the percentage completion of the contract. Can I say percentage of the contract completed is 83.99 divided by 120 into 100 is equal to 83 is the current portion. 120 is the total cost. So cost till date divided by estimated total cost into 100. That is the formula. Now, guys, according to AS7, percentage of contract completed can be calculated in 3 ways. Okay, 3 ways. One is called physical units method. Second one is called surveyor method, technical assessment. Third one is called cost to cost method. So percentage completion, if you read Accounting Standard 7 thoroughly, percentage of contract completed. What is the percentage of contract completed can be calculated in 3 ways. One is called physical units method. Like, I have to construct 100 houses. In that, 82 houses are complete. So 82% of contract is complete. Or I have to pave 10 kilometers of road on national highway, and I have completed 6 kilometers. So 60% of the contract is complete. This is called physical units method. This is called physical units method. Second one is technical survey. Technical survey, surveyor method we call. Simple, you'll call one engineer, chartered valuer. He will do the assessment and he will tell you 65% of the project is complete. He'll give you certificate, work completion certificate, that you can take as percentage completion. This is second one. Third one is cost till date to total cost. Cost method. Now you tell me, in classroom, which one we use in all the problems? 1 or 2 or 3? Method 1, method 2, method 3. Which method we use in class? In class, we always use method 3. In reality, we use technical survey. In reality, we use technical survey. So as a practitioner, I have seen, so many construction companies, but no one will do it like this. Everybody will go with technical survey, which is more scientific. But in the exam, if ICA gives the technical survey says that 65% of the contract is complete, then what you are calculating? You are not calculating anything now. So ICI wants you to calculate. They do not want to give 65%. They want you to calculate. That is the reason they have put this. Okay, so percentage completion of the contract is 83.99 divided by 120 into 100. Can someone calculate and tell me, is this 70%? Hello, is this 70%? Okay. 70% of the contract is complete. Now you tell me contract revenue for the year. Can I say total 108? On that 70% is complete. So 70% of 108 is the revenue for the current year. Bolo, kitna hai? 75.6. Okay. Cost, contract cost for the year given 83.99. So loss from contract for the current year. Estimated further loss. Provision is to be created. Can I say is equal to total, 12 on that 8.39 already over. So balance, you tell me. Hello, balance, provision required how much? 3.61. That's all. This is the answer. Actually, even in the suggested answer for this RTP problem, they should have given this. But I really do not know why they have not mentioned any of these things. They simply said -12. But if you write like that, they'll not give marks, I'm telling you. Even if they do not ask also, you're supposed to do like this. ICI can give any answer because they do not want marks. But you have to do it properly. Why you need marks? Now tell me, if this question comes, will you write this part A or this part B or both A plus B together you'll write? A plus B together you have to write for scoring more marks. Okay, correct. Can we go to next question? Some student is asking, Pavan sir, which standard deals with provisions? Provision for bad debts. So accounting standard 4 is contingencies. And events occurring after balance sheet date. Accounting standard 29 is provisions, contingent liabilities, contingent assets. Now you tell me, which standard deals with this? Venkatesh is saying 4. Oh my God. Kamachi is saying 29. Aishwarya is saying 29. Another 29. Abhinaya 29. 29, 29, 29, 29. Okay. Now, look here, look here, look here. AS 29 says definition. AS 29 says the definition of provision. A provision is a liability. Full stop. Provision is a liability. Liability, 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 liability. But provision for bad debt is not a liability. Provision for bad debt. Now you tell me, is it a liability? Or B, it is adjustment to carrying amount of an asset. Provision for bad debt, what is it? Is it A or is it B? Provision for bad debt, is it a liability or is it an adjustment to carrying amount of an asset? B. So 29 deals with provisions which fall in category A. All of you, please mute your Sandeep, mute your phone, mute your call. There is so much of noise. Huh? So AS 29 deals with a provision only if it is a liability. If it is not a liability, there are different standards for this. For example, provision for depreciation. We'll go to accounting standard 10. Provision for fall in the value of intangible asset. You'll go to AS 26. Provision for impairment loss. Another accounting standard. Provision for depreciation in case of long-term investments. Accounting standard 13. Another standard. Where there is no other standard specified, where accounting standard 29 is not applicable, those provisions are dealt with by AS4. AS4 deals with those provisions which are not dealt with by AS 29 and which do not have a separate standard. AS 4 deals with those provisions which are not dealt with by AS 29. AS 29 said, sorry, don't come to me. I'm not applicable to you. Even for liabilities, there are other accounting standards. For example, provision for tax. Provision for tax, you will not apply AS 29. You will apply 22, effort tax, because current tax. Provision for gratuity, though it is a liability, AS 29 is not applicable. Why? AS 15 is applicable. You understand? So neither separate standard is there, nor AS 29 is dealing with this. Then it has to come to AS 4. So what is the conclusion? Provision for bad debts is governed by AS 4. It is not by AS 29. Actually, this provision for depreciation, provision for bad debts, it is technically a wrong word. Okay. Globally, I have never seen provision for bad debt or provision for depreciation in any country textbooks except India, Pakistan, Bangladesh, Sri Lanka. Even now, Pakistan, Bangladesh textbooks do not have provision for bad debts. Why? Because they are implementing IFRS now. So globally, what do they call, you read UK GAAP, US GAAP, you read IFRS. What they call, it is called allowance. They do not call provision for bad debt. It is called allowance on receivables. They never call provision for depreciation. Provision for depreciation is such a wrong phrase. I'm telling you, you cannot call provision for depreciation. It is allowance for depreciation. But of course, we are in India. ICA uses the language, whether it is technically right or wrong. Who are you and I to debate? At least I can debate. As a student, you should not. So you have to say, okay, provision for bad debt, AS4. So guys, do you understand? Can we go back to our next question? If you understand this, can we go back to our next question? Hello. Can we go to next question? Yes. Very important question. 14, put a star mark. Akshay, you want to read question number 14?
Yes, sir, I'll read, sir.
Read.
14. Revenue from sales where the purchaser makes a series of installment payments to the seller, and the seller delivers the goods only when the final payment is received, should not be recognized until goods are delivered.
Wait. Are we reading question or answer? Hello. Wait, you are reading answer.
So it's an answer, I guess, sir.
Read a question.
Okay, sir. When the revenue will be recognized in the following situation. First one, where the purchaser makes a series of installment payments to the seller, and the seller delivers the goods only when the final payment is received. Second situation, where seller concurrently agrees to repurchase the same goods at a later date. Third situation, where goods are sold to distributors, dealers, or others for resale. Fourth situation, commissions on service rendered as agent on insurance business.
If this question is asked in ICI exams, what do you think? What percentage of students will write correct answer for question number 14? 50% of students will write correct answer, or 70% of students, or 40% of students. What do you think? You're just guess. Guys, tell me. I'm looking at your answer in the chat box. What do you think? Do you think everybody will write correct answer, or everybody will write wrong answer, or at least half of the students will be able to write correct answer? What do you think? 70%, 75% will write correct answer? No, I think more than 75% will write wrong answer. Liana is saying 10%. Bhargav is saying 40%. Yeah, I think hardly 20% people will write correct answer. Hardly 20% of people will write correct answer. Very interesting question. And I'll tell you, in reality, as a chartered accountant or as a consultant, when we are dealing with accounts of a company at a higher level, like board of directors level, I'm not saying about articled assistant level, okay? I'm asking about the engagement partner who signs the financial statements, who signs the audit report, that level. One of the biggest challenges is revenue recognition, which, you know, as an articled assistant or as a student, even if you are in CA final, you never understand the practical difficulty in assessing revenue recognition. One of the biggest challenges. Can you believe for revenue recognition consultancy, companies pay crores of rupees? Companies pay crores of rupees to consultants and experts who tell you whether to recognize revenue in this transaction or not. It is not an easy task actually. And AS9 revenue recognition is one of the smallest and simplest standards which runs into 2 or 3 pages. But when you go to CA final, then it will be Ind AS. Okay, then it is called Ind AS 115. Revenue is Ind AS 115. Can you believe it runs into 100 pages? It is nothing but IFRS 15. So you go to ACCA, you go to USCPA, or you go to any global level accounting and then see revenue, how big the standard is. 100 pages. 100 pages. The explanation for this standard can run into 1000 pages also. I have seen these big textbooks only on this standard. This big textbook. Dolphy D'Souza, Sheikh here. You can see so many books of this size. It's not an easy task. Now let us see one by one. Let us see one by one. First one is, you know, they're asking about when revenue will be recognized. When revenue will be recognized. Where the purchaser makes a series of installment payments to the seller and the seller delivers the goods only when the final payment is received. Okay, now let me give you one example. Let me give you one example. This is date. So on 10th Jan, X paid Y rupees this much to Y. 10th Jan. 20th Jan, 25,000. Then 14th March, not 14th February, 40,000. Then 25th May, 25,000. Total 1 lakh. So on 25th May, Y delivered goods worth 1 lakh to Mr. X. This is transaction. This is what they're asking. When the revenue will be recognized if the purchaser is paying amount in installments and the seller is delivering goods on payment of all the money. This is what it is, where the purchaser makes installment payments and seller delivers the goods only when the final payment is received. This is the question. Now you tell me, what is the date on which revenue is to be recognized? I don't know. I don't know. You tell me. So tell me the date. Abhinay is saying final payment. So do you think 25th May revenue is to be recognized? 25th May revenue is to be recognized. 10th Jan. Manish is saying 10th Jan. Shibli is saying 25th May. What other answers I can get? Or can I say that on 14th March, we have collected majority of the more than 50% of the consideration is received on 14th March, accumulative. So can I say 14th March? The risk and reward, 25th May. Okay. in general, 25th May is to be considered. 25th May revenue is to be recognized. Why? Risks and returns associated with goods are transferred on that day. Risks and rewards associated, risks and rewards or risks and returns associated with the goods are transferred. So on 25th May, revenue is to be recognized. Okay, till that time, see, here you will prepare one balance sheet, no, 31st March. 31st March, you will prepare one balance sheet. In that balance sheet, you have collected 10 plus 25 plus 40, 65,000 you collected. What will you do with 65,000? Will you show it as revenue or will you show it as advance received against sale, which is a contingent liability? So on 31st March in balance sheet, will you show 65,000 as EA? You tell me, will you show it as revenue or contingent liability? Advance received. What is correct? A is correct or B is correct? B is correct. Advance received, which is a contingent liability. This is correct. But, Pavan sir, I am running this business for the last 40 years, Pavan sir. This is my business model. I know Mr. X for 15 last years. I have sold goods more than 100 times to him. He regularly comes to me, gives some money, then tells me, Anna, I will bring balance money, then I will purchase goods, Anna. I'll say, okay, Tambi. After a few days, again, Mr. X will come to me. Again, he will say, Anna, take some more balance, Anna. Again, he'll come to me. So this I have seen enough times in my life. I am confident that he will not dispute about the advances given. I know that he is a nice guy. He will bring the balance money. I will sell the goods. I know it. This is my regular business. This is my regular business. So, Pavan sir, can I recognize revenue on 31st March? Because I know this guy is a nice guy. What do you think? Tangadura is saying no. Abhinaya is saying no. What do you think? So recognizing revenue is bad. Recognizing revenue is wrong. But goods are transferred on the day. Agreed. Agreed. Goods are not yet transferred. Agreed. That is the reason I told you accounting standard 9 is the most complex standard. Now read the answer. You will get heart attack. Read the answer. You will get heart attack. Revenue from sale where the purchaser makes a series of installment payments to the seller and seller delivers goods only when final payment is received should not be recognized until the goods are delivered. That means in this phrase, in this sentence, they are saying 25th May. This is what they said. After that, however, underline, bold. When experience indicates that most such sales have been consummated, revenue may be recognized when a significant deposit is received. Shit. That means ICI is saying, dear seller, based on your confidence level, gut feeling, expected probability of occurrence, experience in the business, do you think this will happen? Yes, sir. Then go ahead and recognize revenue on 14th March. Student will get a heart attack. Sir. What you are talking, sir? That's all. Wicket bowled. So now you tell me what percentage of people will write correct answer for this part? See, Akshay, all the accounting policies have to be disclosed now. Revenue recognition is also an accounting policy. So anyway, you'll disclose it. Anyway, you'll disclose it. Disclosure is not a concern here. There is no concern of disclosure here. The concern is when the revenue will be recognized. Will you recognize it on 14th May or will you 25th May or will you recognize it on 14th March? This is the concern. What students are not even making some noise. Hello, are you still alive or gone? Tata, bye bye. Shall we look at second point? What is this? When seller concurrently agrees to repurchase the same goods at a later date, put a star mark, 10 star marks. Put 10 star marks on this, 20 star marks on this. If my gut feeling is right, this will come in the exam. Why? Because it is not CA inter-level point, it is CA final level point. Where seller concurrently agrees to repurchase same goods at a later date. What, only Pavan sir. On 15th March 2022, X Limited sells goods worth rupees 1 crore to Y Limited with a concurrent repurchase agreement, whereas Y Limited has to purchase the same goods worth the same goods at rupees 1.1 crores. Say for example, on or before 30th June 2020. This is the transaction. So on 15th March, in the books of X Limited, what is the journal entry? On 15th March 2022, X Limited sold goods to Y Limited, no? So cash account debit. Or you write Y Limited if money is not received. Cash account debit to sales account. Goods sold to Y Limited with repurchase agreement. 1 crore. 1 crore. So, guys, how many of you think this is correct journaling? Imagine the cash is received. Imagine it is a cash sale, not a credit sale. Cash account debit to sales account. Goods sold. Cash to advance. No, goods given. What? Why cash to advance, ma'am? You know what is the actual transaction happened here? You know what is the actual transaction happened here? See, you have a commodity. This is a commodity. You have this. I came to your shop. We are friends. Okay. I asked you, hey, Shibil, how are you? Shibil said, yeah, Pavan, I am fine. But Pavan, I'm in need of 100 rupees here. Can you give me a hand loan of 100? I said, Shibil, I do give hand loans, but I need some security. Then you said, ha, chalo, take this cup, 250 rupees per cup. Give 100 rupees. I will repay this and then I'll take the cup back. So I gave 100 rupees to Shibil and I took stock in trade. This is a stock in trade. So I took one good from Shibil. I gave 100 rupees. Do you think Shibil sold this at 100 rupees to me? No. Money, goods exchanged. Money, goods exchanged, but not sale transaction. It is a finance transaction where goods are acting, goods are being considered as security. So the actual transaction here is Y Limited gave a loan to X Limited worth rupees 1 crore with an interest element of 0.1 crore against security of goods. This is the actual transaction. Y Limited gave a loan to X Limited worth 1 crore with an interest element of 0.1. How this loan is given? Against security of goods. This is the transaction. How you need to write this, Can you believe what is the journal entry? Cash account debit to loan from Y Limited. So here you have to write cash account debit to loan from Y Limited. Shit. So how to write the answer, How to write the answer, This is not a revenue. Revenue should not be recognized. This normal student will write. If you are super smart student, you need to write one more line. What is that line? Such cash flows are not to be included in the operating cash flows of the entity in cash flow statement as per AS3. Then you will get full mark. Such cash flows are not to be included in the operating cash flows. That is to be included in financing activity cash flow. This is second point. Half the students will not be able to write this correct. So second one is also over. Third one, where goods are sold to distributor, dealer, or others for resale. Now, who are you? Wholesaler. To whom you are selling goods? To distributor, to dealer, or to retailer. Now the question is, Pavan sir, whether these people, are they acting as principal to principal, or are they your agents? So here there is X Limited. Sold goods to Y Limited, dealer. Z Limited, distributor. A Limited, retail. Now, what is the arrangement between X Limited and other parties is to be thoroughly reviewed. If there is a principal to principal relationship, sale is to be recognized. If there is a principal to agent relationship, this should be treated as consignment sale. That means sale cannot be recorded. If it is consignment sale, revenue should not be recognized when X Limited sells goods to other party. Instead, revenue should be recognized when Y, Z, or A sells goods to third party. This is the answer for third part. This is the answer for third part. Now you might say, Pavan sir, what big difference it makes, Pavan sir? You know what is the difference? Principal to principal revenue recognition on gross basis. Principal to agent revenue recognition on net basis. Huge difference. You cannot even imagine how much of difference it is. Now imagine there are three parties. Aishwarya, Book My Show, PVR. Okay. Aishwarya want to go and watch PS1 with her friends. Hello, Aishwarya madam, did you watch PS1?
No, sir.
Why? Exams, eh?
Yes, sir.
So Aishwarya purchased a ticket from BMS. So Aishwarya paid 110 rupees to Book My Show. Book My Show paid 100 rupees to PVR. Now, in the books of Book My Show, what is revenue? Is it 110 rupees or 100 rupees or 10 rupees? What do you think? Same example, Aishwarya wants to purchase a flight ticket to London. There is Make My Trip website through which Aishwarya purchased Air India flight ticket. Aishwarya has paid 55,000 to Make My Trip, which paid 45,000 to Air India. So in the books of Make My Trip, what is the revenue you think? Is it 55,000 or is it 10,000? If you look at the ticket when you buy from Book My Show, if you look at the ticket, Book My Show ticket, they will charge you GST only on 10 rupees. Ticket, 100 rupees. Convenience fee, 10 rupees. GST on convenience fee, 18% on 10 rupees, 1.8. So total they will collect you 111.8. That means what is revenue for them? 10 rupees, not 110 rupees. So PVR will pay GST on 100 rupees. Book My Show will pay GST on 10 rupees. Because these people are agents, selling agents. Hotel booking, flight booking, ticket booking for events, movies. Then you follow net approach. Net 10 rupees is my revenue. I collected 110, I paid 100, 10 is my revenue. I collected 55,000, I paid 45,000, 10,000 is my revenue. So if these guys are your agents, then they have to follow net approach. See how complicated it is. Chalo, anyway, this is third part. Fourth part, commissions on services rendered as agents on insurance business. First three are related to sale of goods. Fourth one is related to service. What do you think? AS9 deals with how many types of revenue? Tell me, AS9 deals with how many types of revenue? Okay, do you think one or two? Three. Everybody is saying three. One is sale of goods. Second one is rendering services. Three, use of enterprise resources by others that result in interest, dividend, and royalty. These are the revenues. As per AS 9, these are the revenues. One is from sale of goods. One is from rendering of services. One is from use of enterprise resources by others. Okay. When it is the sale of goods, when revenue is to be recognized? Can you tell me when revenue is to be recognized? Transfer of risks and rewards associated with goods. Normally it is on delivery of goods, but there are exceptions. Normally it is delivery of goods, but there can be exceptions. Rendering of services. What do you think? How many methods of revenue recognition is given? One or two? One or two? What are they? Option one. Option one. Option one. Completion of service. Option two. Proportionate completion. Completion of service method, proportionate completion. So, do you think the company may either follow option one or they may follow option two, and it can be accounting policy? I will choose either one or two. Or do you think in a specific situation, a specific method is to be followed? Trust me, 99% of students do not know answer for this question. Maybe I'm not that aggressive, but if I am aggressive, I will say majority of teachers also will tell this wrong. But of course, let us not go into that. You know, at least students do not know this. So now, what is service? What is the nature of service? Is it a single performance obligation? Or series of performances? If it is a single performance obligation, completion of service method is to be chosen. Multiple performance obligation, then proportionate. What is that? X Limited is an event manager. See, I'm spending so much of time on AS9 because I know it is very important and I'm expecting a question from this. That is the reason I am revising the whole concept. Otherwise, trust me that 4 lines question, 4 lines answer, we can go to next question. But still, I'm revising the whole concept because I know it is very important from exam point of view. The clarity and the degree of understanding is very poor in student community. Very important from even practical, accounting point of view when you are an articled assistant. That is the reason I'm spending so much of time. Let me complete this. X Limited is an event management company. X Limited is an event management company. Okay. They paid rupees 1 crore to Shreya Ghoshal, a renowned singer, on 16th October 2022. Okay, do you think Shreya Ghoshal is sitting idle at home and killing mosquitoes, or do you think she must be busy with probably 1 year, 2 years full of diary? Do you think her diary will be full for maybe next 1-2 years? Easily, isn't it? Isn't it? So on 20th October 2023, next year. Diwali celebrations, musical night in Chicago. She has to perform songs there. On 31st, everything they have paid in advance. 1 crore rupees remuneration, 1 crore they have paid in advance. On 31st March 2023, Shreya Ghoshal has to prepare her balance sheet date. Yeah. Do you think I have received already 1 crore? Shreya Ghoshal already received 1 crore. Do you think this is revenue to be taken to my P&L account? Or B, this is advance to be taken to my balance sheet as current liability? Tell me, A or B, which one do you think? Obviously B. Now you tell me, when revenue can be recognized by Shreya Ghoshal? When revenue can be recognized by Shreya Ghoshal? This date, on 20th October 2023. Why you know? Why you know? It is a single performance obligation. It is a single performance obligation. One performance. So completion of service method should be followed. Single performance obligation. Now, PA Limited, an event management company, paid rupees 1 crore to Shreya Ghoshal on 16th October 2022, wherein the celebrity acts as a judge in the Voice India Kids 2022 season 4. There are 10 episodes. Ta-dan, ta-dan, ta-dan. Do you think it is a single performance obligation? How many performance obligations are there? 10 episodes. 10 obligations. 10 times she has to go. 10 costumes, 10 makeup, 10 dates. Correct. Now, 31st March 2023, when she is preparing her balance sheet, 4 episodes shooting is over. Now you tell me, I don't know, my mind won't work. How much of revenue can be recognized out of 1 crore? 40 lakhs, 4 by 10 into 1 crore. Students are giving different answers. Let us see. Okay, guys, what do you think? What is the revenue to be recognized? 40 lakhs, 40 lakhs, 40 lakhs. Because there are multiple performance obligations, series of performance obligations, proportionate completion. 4 on 10, 40%. 40% on 1 crore, 40 lakhs. I have seen lecturers, with due respect to everyone, I'm not criticizing anyone. I have seen people teaching the students, it is an accounting policy of the company. They can either follow single performance obligation, or they can follow, percentage of completion method, proportionate completion method, or they can follow completion of services. They need to disclose it. I'm like, no, it is not a choice given to you. You can choose option 1, option 2. No, Based on the nature of contract and number of performance obligations, you need to choose. Now you tell me, with this background, I don't know the answer. You tell me. Commission on service rendered as agent on insurance business. Do you think insurance commission you have received as insurance agent, is it for one single performance obligation or multiple performance obligations? For example, Bhargavi purchased insurance policy from LIC and I am the agent. She paid 1 lakh rupees premium. I got my 2000 commission, for example. Do I have any other obligation towards Bhargavi? No, my job is over. She signed the application. I have given application in the office. They have sent email to Bhargavi. I got my 2000. Single performance obligation. That's all. So whenever the obligation is complete, I will recognize revenue. Now you understand these 4 things. See how interesting accounting is. Can we go to next question? Hello. Who is going to read our next question? Faith Thomas, can you read this question, please?
Question number 17. Segment reporting. AS17 segment reporting. A company has an inter-segment transfer pricing policy of charging at cost less 10%. The market price is generally 25% above cost. Is the policy adopted by the company correct?
Star mark. 1, 2, 3, 4, 5, 10 star marks. Very important point. Again, from CA final. This question is also from CA final. Next question is also from CA final. Now, as per accounting standard 17, segment reporting, what do you think? This includes only external revenue. That means goods sold by entity to outsiders, or B, internal revenue, goods sold by one segment to another segment. Don is saying yes, correct. Inter-segment transfer pricing policy is the discretion of the company. Okay, so what do you think? AS17 deals with external revenue or internal revenue or both? Both. Okay. Now, this is the matter of concern here. Say, for example, a textile retailer, textile company. Okay, they have, say, for example, cotton wing department, stitching department, or you can say this is cloth stitching department, and they have retail wing. So they make cloth. These people make shirts, sell shirts. So here in retail department, there is outside sale. Now, do you think in these 2 departments, they have any external revenue? For clothing department and stitching department, do you think there is any external revenue? No. They are working only for the next department. Process 1 is working for process 2. Process 2 is working for process 3. Process 3 is selling goods. So maybe in many cases, process 1 and process 2 will not have revenue. Sometimes recognizing revenue is not possible. Sometimes, though it is possible, the company will not sell cloth to outsiders. They are making cloth only for themselves. Okay. Now, Now, clothing department, this is the case. Cost of processing 10 lakhs. Okay, market price. This is something like fair market value. Fair market value. 12,50,000. Transfer price. Cost minus 10%. 9 lakhs. So I manufactured goods worth 10 lakhs. I manufactured goods worth 10 lakhs and I am transferring that to my next department. If the second department is buying this from market, they would have spent 12,50,000. If the second department is buying this raw material, not from the department one, but from outside they are buying, they will have to spend 12,50,000. But company board of directors said, dear department one, send goods to department two, dear department two, pay 9 lakhs to department one. Okay. So the actual transfer price is this. Now, as per AS 17, what should be included in segment revenue of department one? So this is your option A, this is your option B, this is your option C. So what do you think will be the correct answer? According to AS 17, what should be included in segment revenue? This is the question. Hello, I asked a question. You're supposed to answer. Tell me, what should be included in segment revenue? Is it 10 lakhs, which is my cost? Or is it 12,50,000, which is my market price? Or do you think 9 lakhs is enough, even if it is lower than transfer price? Joseph is saying C, Amala is saying C. Transfer price can be cost, market price, above cost or below cost. That means you can do some loading or you can subtract some amount also. It can be below cost also. No problem. So whatever the company follows as a policy can be taken for AS 17. But such policy should be consistently applied and disclosed. Pavan sir, this year sale minus that cost minus 10%. Next year cost plus 15%. Pavan sir. Next year market price. Next year fair market value. Next year net realizable value. Next year cost minus 22.5. No, you cannot change it because it is accounting policy. You understand? So the transfer price 9 lakhs is allowed. No problem. That is the answer. So Aishwarya, read this answer, ma.
AS 17 segment reporting requires that inter-segment transfers should be measured on the basis that the enterprise actually used to price these transfers. The basis of pricing inter-segment transfers and any change therein should be disclosed in the financial statements. Hence, the enterprise can have its own policy for pricing inter-segment transfer, and hence inter-segment transfers may be based on cost, below cost, or market price. However, whichever policy is followed, the same should be disclosed and applied consistently. Therefore, in the given case, Inter-segment transfers pricing policy adopted by the companies correct if followed consistently.
That's all. So guys, do you understand this? Can we go to next question? Do you understand this? If you have understood this, say yes in the chat box. Then we'll go to next part. Let me wait for 25 yeses, then we'll go. 25 students or maybe 40 students. If you say yes, then we'll go to next question. Otherwise, people are eating, sleeping there. See how new names are coming in the chat box now. Very good. UVA3. Hello, madam. Read question number 16. Anyone else? No problem. Venkatesh, you want to read the next question?
Yes, sir.
Read.
SP Hotel Limited enters into an agreement with Mr. A for running its hotel for a fixed return payable for the later every year. To the later every year. The contract involves the day-to-day management of the hotel, while all financial and operating policies decisions are taken by the board of directors of the company. Mr. A does not own any voting power
Read, ma.
in SP Hotels Limited. Would he be considered as a related party of SP Hotels Limited?
Venkatesh, where are you from?
So Tamil Nadu.
That I understood. Which part of Tamil Nadu?
Tiruvannamalai.
Tiruvannamalai. Very good. Very good. Very good. So what do you think? What is the answer for this? Is Mr. A related party of SP Hotels or no? Guys, all remaining people, tell me in the chat box. What do you think? Sir, we did not even understand the question, sir. Sir, can you do one thing, sir? First, read question and explain question, sir. Thank you, sir. Venkatesh, is that the concern now?
Yes, sir. Yes.
Half the students might not have understood the question also. Now, Venkatesh, tell me one thing. If I'm a faculty associated with ICI. Hello,
Okay,
Venkatesh,
sir.
are you there?
Okay, sir.
So I'm a faculty associated with ICI.
Okay.
ICI said, Pavan, you have less hair but big brain. Whole our, Chennai ICI, whatever the academic classes are there, you schedule the classes, you be the academic head, you run the whole show.
Okay.
We will give you this remuneration per month.
Okay.
I accepted. Imagine, I accepted. Do you think ICI and Pavan are related parties?
Yes, sir. You have 100% control over there.
Hey. This is ICI class, ICI material. If you say I have 100% control over ICI, then I will never be a chartered accountant again. You will never be a student. Okay, ICI will kill you. ICI control, no. Prime Minister Narendra Modi also will not have control on ICI. Okay.
So, I thought in that branch only, sir.
No. Even in that branch, what control I have? What is the meaning of control, bro? Control is not like, I will tell something to you, you will listen. Control comes by holding more than 51% of the voting rights.
Sorry.
Significant influence comes by holding more than 20% of the voting rights. It is the ability of a person to take operating and financing decisions. What do I have? Do I have voting rights in ICI? Whenever members voting is there, I will have voting right, but my vote is one vote, no. Out of 2 lakh votes, my vote is 1 vote. That means what is my control? What is my percentage of holding? 1 divided by 2 lakh, 0.00000 something. Now, if you remember, there are 5 types of relationships in accounting standard 18, A, B, C, D, E. Okay. First one is control. What is control? Holding substantial, more than 50%, holding majority of voting rights or majority of shares, more than 50%. Then it is control. Directly or indirectly, this is control. So control means you are holding more than 50% of shares, capital or voting rights. This is one type of control. Another type of control is composition of board of directors. That means if I can appoint, reappoint, or remove all of or majority of directors of the company, then I am controlling. What? Come again. For example, Tata Motors holds 100% of shares of Jaguar Land Rover. Do they have control? Yes. Do they have control? Yes. Tata Sons holds, say for example, 10% of shares in Tata Motors. Now you tell me whether Tata Sons controls Tata Motors, whether Tata Sons is a holding company and Tata Motors is its a subsidiary. See, if the same question I ask in this situation, your answer would be very clear. Pavan sir, 100% of shares sponsor. Even if it is 60% of shares, yes, Tata Motors is a parent company, Jaguar Land Rover is its subsidiary. It is very simple. Because shareholding and voting rights, straight, direct. But even in this case, my dear friend, the answer is yes. Tata Sons is still the parent company of Tata Motors if majority of the directors in Tata Motors board, majority means what? All or more than half. Substantial part are appointed or reappointed or removed by Tata Sons. But they hold only 10%. They hold only 2%. They hold only 8%. Still, it is parent company. Still, Tata Motors is subsidiary company because they are controlling the composition of board of directors. So this is a relationship. Another relationship is, first relationship is control. Second relationship is substantial interest. More than 20%. More than 20%. This is called the ability to participate and influence. Significant influence we call. Substantial interest, a significant influence. The ability to participate and influence. What is the first one? Control means the ability to make decisions. What is control? Control is the ability. Ability to make decisions. So today, if Tata Motors in Mumbai, they made a decision that Jaguar Land Rover's 80% of the profits will be distributed as dividend. And they informed Jaguar Land Rover, which is in London, So the London head office of Jaguar Land Rover received an email from the Mumbai head office of Mumbai corporate office of Tata Motors that, hey, JLR, 80% of your profits are to be distributed. Do you think Jaguar Land Rover can say, no, we don't want to? How can you decide what is our percentage of profits to be distributed? We will decide our, dividend payout ratio. Do you think JLR has right to, have their own dividend payout ratio, their own dividend yield? No. Whatever Tata Motors says, shut your mouth and follow, because you are a subsidiary company. That is control. Second one is significant influence. Third one is joint control, like joint ventures. Like, our classic example is Vodafone and Idea. Oh, now it is merged. Now it is no more joint venture. And another venture, another classic example could be our Tata Coffee and Starbucks. Tata Coffee and Starbucks is a joint venture. Maruti Suzuki. Maruti Suzuki is a joint venture. Maruti is a company, Suzuki is a company, Maruti Suzuki is a joint venture. Tata AIG. Joint venture. Okay, percentages could differ, but joint venture, joint control. This is one relationship. Another relationship is KMP. What is KMP? Hello, what is KMP? Fourth relationship. What is KMP? Key management personnel, correct. Key managerial personnel. So can I say all directors? All directors are KMP. Is it so? Yes or no? All directors are KMP. Yes or no? Hello? Give the answer. All directors are key managerial personnel. Yes or no? Those directors who have the authority and responsibility of directing the company, strategizing the company, participate in the planning and strategy, they are KMP. There will be so many independent directors or non-executive directors or part-time directors or director simplicitors. They are not KMP. They are not KMP. No. It is not only MD, ma. No. Who said it is only MD? MD, CEO, CFO, all these are KMPs. Those who participate in designing the direction of the company. See, for example, nowadays what happens, I have seen in some of the firms, especially private firms and small firms, even, he is actually a marketing executive, marketing manager. To satisfy him, you are giving him vice president marketing. But actually, he's a marketing executive. He's a marketing executive. But you look at his visiting card, it says vice president marketing. Are you kidding me? I have seen so many directors who are not even manager level. On paper, will be given directors. But nowhere in KMP. All directors are not KMP. Those directors who have the ability to make decisions. What type of decisions? Financing decisions, operating decisions. For example, where the plant to manufacture Tata, give me one Sumo SUV, where the plant to manufacture Tata Sumo SUV is to be located. Tata Motors is in need of 15,000 crores, whether shares are to be issued or debentures or bank loan. Who can take these decisions? No, that guy is KMP. First one is operating decision, Second one is financing decision. Now, do you think if there is any, marketing head, director marketing, or director information technology, or director research and development, do you think these people will be able to make these decisions? There can be one director R&D. There can be one director marketing. There can be one director HR, human resources. There can be one independent non-executive director. Do you think these people will have any say in these kind of things? Normally, no. They'll not participate in decision making also, I'm telling you. Forget about making decision. They'll not be part of the decision also. Why? In their code of conduct, in their employment letter, clearly it will be written that you will do only 1, 2, 3, 4 activities. You will not do anything other than this. Now you tell me, coming back to the question, there is one company called SP Hotels. So one company is there which is running hotels. One guy is there, say Mr. A, this guy is, say for example, our Kavi. So this hotel called Kavi came for, say for example, one interview. Now this board of directors, after conducting that interview, they are with opinion that this person, this candidate Kavi has too much of ability, not just an employee material. She is not employee material. This is, manager profile or beyond manager profile. So what they did, hey, Kavi, would you be interested to deal with running the day-to-day affairs and operations of the hotel? You run the whole hotel, and whatever the profit of hotel is, we'll give you 20% per annum. We'll give you, say for example, 1 lakh per month and 20% in profits. We'll give you this. But you will have to run the hotel as per the financial and operating policy decisions made by the board of directors. You will not make decisions. You are implementing decisions. Who will take decisions? Board of directors. Company is there, no? Company is there. Company board of directors are there. They will make decisions. Now, what is the role of Kavi? You sit in the hotel, run the hotel, look after the day-to-day activities, operations, take care of the management, and ensure that hotel is run smoothly and profitably. And what is the voting right you have in the hotel company? 0. You do not have any voting right. You cannot take any decision. Now, this is the role of Kavi. Now you tell me, would Kavi be considered as a related party of SP Hotels? This is the question. Question is over. I don't know the answer. You tell me the answer. Am I holding company? No. Am I investor company having significant influence? No. Am I a joint venture company? No. Am I key managerial personnel? No. Am I indirectly related to a key managerial personnel? No. A is not there, B is not there, C is not there, D is not there, E is not there, ED yet. What relationship is there? No relationship. That's all. That's all. So there is no relationship. Okay, neither he is having a voting right, nor she is having ability to make decisions. Okay. Kavi, can you read this? Fifth type of relationship is persons. Aishwarya, fifth type of relationship is persons involved in KMP. For example, if I am KMP, my relative. Firms and individuals related to KMP. Is that clear? Hello. Okay, read this one.
Mr. A will not be considered as a related party of SP Hotels Limited in view of AS 13, which states individuals owning directly or indirectly an interest in the voting power of the reporting enterprise that gives them control or significant influence over the enterprise and relatives of such individual.
And
in the
see,
given case,
look here. Individuals owning directly or indirectly an interest in the voting power of the enterprise that gives them either control more than 50% or the significant influence more than 20% and his relatives. This is the definition. Now you look at the given case. In the given case, what happened? Read ma.
In the given case, in the absence of share ownership, Mr. A would not be considered to exercise significant influence on SP Hotels Limited, even though there is an agreement giving him power to manage the company. Further, the fact that Mr. A does not have the ability to direct or instruct the board of directors does not qualify him as a key management person.
Khatam. That's all. You understand? Can we go to next question, please? Hello, 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 hello. Okay, so we'll go to question number 20A. Can we read question number 20A, ma?
Yes, sir. CA Limited launched a project for producing product X in October 2021. The company incurred 40 lakhs towards research and development expenses
Wait,
up to
wait.
31st
Hello,
March.
wait. The question is over, answer is over. What is the question? What is the answer? You tell me. Now they'll tell you some stories, screenplay direction like Prashant Neel. They will do, this company has spent this much of money on research, development, market condition, financial feasibility, market, technological viability, all the shit they speak. But remember one thing, the moment this bloody word is there, accounting standard 26 says research cost cannot be capitalized. No intangible asset out of research expenses can be capitalized. No part of research expense can create an intangible asset. So simple. If it is research cost, what is the accounting treatment? Expense it off to P&L. Irrespective of the management confidence level. Now in question, to confuse you, they might give you that, they are 100% sure that the project will be huge success. Boss, there is no connection between recognition of intangible asset out of research cost and management confidence. No one asked you if the management is confident. No one told you. Standard said research cost is to be expensed to P&L, full stop. Similarly, advertisement cost, promotion cost, brand building cost, initial campaign, all these things, whatever the amount is, expense it off. 10 years back, you could have said, sir, this huge campaign, product launch expenses, promotion, Deepika Padukone is brand ambassador, 100 crore rupees is the value involved. Kalyan Jewelers has done this campaign with Amitabh Bachchan and Aishwarya Rai. That money will give, a future economic benefit of 5 years. Boss, that story 10 years back, you can tell. Today, if it is advertisement expense, you cannot create any intangible asset. You cannot defer anything. So there is no concept of deferred revenue expenses. There is no concept of creation of intangible asset out of advertisement. Those days are gone. So you have spent amount towards advertisement or marketing or promotion or brand building or whatever it is, huge, heavy campaign or product launch expenses. They might tell you that the management is 100% sure that this particular promotion will give a future economic benefit of 5 years. Standard asked one simple logic. Do you control the market? Is there any control of you created because of this campaign on the market? Do you control market share? No. Then it is only a hope. Hope is not enough for accounting. So research expense to P&L. Advertisement expense to P&L. Development cost. Development cost. What to do? Do you think development cost can be capitalized? Hello. I'm asking a question. I'm expecting answer. Do you think development cost can be capitalized? May be capitalized subject to conditions. Financial feasibility, technological viability, market conditions, the ability of the company to complete the project, the willingness of the company to complete the project, availability of the resources. If all these conditions are satisfied, then development cost may be capitalized, but the amount of asset measurement concept, the amount at which intangible asset is created cannot exceed the present value of future economic benefits in terms of cash flows. Shit. What is this? First year, 100 lakhs. Second year, 100 lakhs. Third year, 100 lakhs. Fourth year, 100 lakhs. Fifth year, 100 lakhs. So you calculate the present value of this cash flows. So it came to say, for example, 379 lakhs. The present value of future cash flows is 379 lakhs. Development cost is 450 lakhs. 450 lakhs cannot be capitalized. 450 lakhs cannot be capitalized. So 450 lakhs is the development cost the company has incurred, and this has satisfied all the criteria given in accounting standard 26. So eligible to be capitalized. Correct. Correct. Recognition satisfied. But what is the measurement? Is it 450? No. The measurement concept says the amount that has been incurred towards development cost or the present value of the future economic benefits, whichever is lower. So you take 100 lakhs year 1, year 200, year 300, year 400, year 500. Calculate. Take the present values. 1 divided by 1.1 whole power 0, 1 divided whole power 1 divided by 1.1 whole square. Calculate 0.901, 9091. Then 0.826, 0.751, 0.689, 0.681, 0.629. So you multiply and then calculate. Oh, this is coming to 379 lakhs. But you want 450 lakhs. Out of 450 lakhs, 379 lakhs can be capitalized as intangible asset. 450 minus 379, 71 lakhs should be charged to P&L as loss. Development cost account debit to cash account 450. Intangible asset account debit 379. P&L account debit 71 to development cost 450. Now, taking it to next level, what if there is an integrated project with Pavan sir, research and development cost? It is neither research cost, it is not development cost. That means since the ideation to the project life cycle, product life cycle, commencement of product life cycle, like that introduction, till that everything is integrated, Pavan sir. So this is starting of the research. This is starting of the commercial exploitation of the concept. So the gap between this hand and this hand is neither research nor development. It is research and development. What to do? Now you tell me. If it is research and development cost, what to do? I don't know. You tell me. Whatever you tell, I'll follow. Whatever you tell, I'll follow. Do you think it can be capitalized? Hello, I'm asking you a question. I'm waiting for your answer. Research and development cost. Situation A. Situation A. No. Don't expense it off. Research cost and development cost can be identified separately. Pavan sir, out of 500 crores we have spent, 200 crores is for research, 300 crores is for development cost, where accounts are properly kept and it is available. If it can be identified separately, development cost can be capitalized, research cost is to be expensed. Situation B, research cost and development cost are not identified separately. Now expense of everything. Kamachi is saying after the product comes to the market, based on that only decided, sir. No. There is no connection between accounting and after the product is launched, what will happen in the market. Accounts has nothing to do with that. It can be huge success, it can be huge failure. If it is a disaster, wouldn't make any difference. If it is huge success, wouldn't make any difference. It could be, it could be as revolutionary product as iPhone 6, as revolutionary product as iPad. Wouldn't make any difference. Accounts, accounts is never excited with market conditions. You understand this? Hello? So now simple. Due to prevailing market conditions, management came to the conclusion that the product cannot be manufactured and sold. Boss, whether management can manufacture the product or if they do not manufacture the product, if they are confident of success of the product, if they are confident that product will be failed next 10 years, next 2 years, 5 years, what is the future economy? Nothing. Management hence wants to defer the expenditure right after future years. No, the contention of the company is wrong. Are we done with question number 20A? Hello? This question number 19 and this 24, this 19A and 19B is there, no? Question number 22 and 24. In this discontinuing operations, there cannot be a problematic question. Two standards like, AS 24, then what is the other standard? AS 18. From these two standards, practical questions can never be asked. Only theory can be asked. Why, they are not accounting based standards, they are disclosure based standards. Both the standards are disclosure based. AS deals with how many things? Accounting standards deal with how many things? Hello, tell me, AS deals with how many things? Idiots you are. Sir, when you show 4 fingers, we can tell you 4 in the chat box, but there are 2 problems, sir. One is you are not a trustworthy guy. You can put a 4 and you can tell 6. This is one. Second thing is, even if 4 is correct, if we say 4, after that, if you say what that 4 are, we do not know. So why are you taking risk? So remaining 50 students are keeping quiet. I will also. Accounting standards deal with 4 things: recognition, measurement, presentation, disclosure. You understand? Recognition, measurement, presentation. First day of accounting standards class, I would have told you. Okay. When an accounting standard contains recognition and measurement, then only accounting is there. If it is based on presentation and disclosure, numbers will not be there. But if it is something like earnings per share, which is a presentation based, accounting will not be there, but calculations will be there. Accounting standard 17, calculations will be there, accounting will not be there. So what is the journal entry you pass in accounting standard 20, earnings per share? No journal entry. Because it will not come inside the balance sheet, inside the P&L, inside the cash flow statement, it will come below the P&L after the P&L is over. Then you will write basic earnings per share, diluted earnings per share. So there is no accounting. So see how beautiful it is. Accounting will not be there. So there are certain standards which are exclusively accounting. Classic example is AS 19. All the calculations are towards a journal entry. All the calculations, you do so many calculations, finally you'll pass one journal entry. That is actual recognition and measurement. Recognition, when to pass journal entry, measurement, with what amount the journal entry is to be passed, presentation, where it is to be shown, disclosure, what information is to be given. So this AS 24 and AS 18 are basically disclosure based standards. So it is only theory. So disclosure requirements, theory, 2 points will be there. That 2 points you read. Okay, whenever you are not sleepy, night 11 o'clock or 12 o'clock, sleep upside down on your bed, then open this discontinuing operations, read these 2 points. By the time you complete these 2 points, you will be sleepy, because whenever you read theory, that only will happen. Not a big point, small points. Define the following as per AS 22: accounting income, taxable income, tax expense. Aha. How beautiful this question is. Probably this is the easiest question in AS 20. They're asking about the meanings of these 3 words, definitions of these 3 words. This too you do. Okay, 19th question, because it is theory, you do. 20th question is EPS, I will tell you. 20th question is EPS, I'll tell you. There will be 1-2 more questions. Like, you know, one lease question can be there, and one AS 29 can be there. 29 is damn easy. 29 is very easy. Lease question actually is also easy, because I think this lease question is about unearned finance income, which is just, you know, you'll put gross amounts in one column, discount factor, net amounts, discounted one column, add this. Difference between these two is unearned finance income, LKG calculation. LKG calculation. If you do not understand, read the solution. After reading the solution also, if you do not understand, we have already free videos available on that in our YouTube channel. You can view that. Even then, if you do not understand, you can contact. Okay, but next question is diluted EPS. The moment diluted EPS is there, student heart will come into panic. Sir, diluted EPS, sir. You tell sir. Diluted EPS will not do, sir. You only tell, sir. Okay, so shall we do this diluted EPS problem? Problem number 20, which will be our last question for the day. So who wants to read? Aishwarya, you want to read this, ma?
Yes, sir.
Read.
AS 20, earning per share. The following information relates to XYZ Limited for the year ended 31st March 2022. Net profit for the year after tax, 37,50,000. Number of equity shares of rupees 10 each, outstanding 5 lakhs. Convertible debentures issued by the company at the beginning of the year. 8% of convertible debentures of 100 each, 50,000 numbers. Equity shares to be issued on conversion, 55,000 numbers. The rate of income tax 30%. You are required to calculate basic and diluted earning per share.
So is it an easy problem or a difficult problem? Aishwarya, what do you think?
Easy problem.
Very easy problem. Not a difficult problem, but typical examination question this is. So can I say basic EPS is this net profit for the year divided by weighted average number of equity shares, which is 5 lakhs?
Yes, sir.
So 37,50,000 divided by 5 lakhs, is it basic EPS?
Yes, sir.
No, calculate and tell me. Is it 7 rupees?
7.5. Yes, sir. 7.5%.
Okay. What do you think? What percentage of people might have used calculator for this?
I also use calculators.
I understood. I heard the calculator tuck tuck sound. That is the reason I'm telling. For these kind of things, don't use calculator. Okay, come on. You're doing CA enter.
Okay, sir.
Okay. If someone is asking you, say for example, 10 lakhs divided by 1.1 whole square, how much? Then if you are using calculator, that makes sense. Okay. For that also, you can say 8,26,000 approx. That is also possible. Repeatedly, if you are doing same number, no. Chalo, sir, don't scold us, sir. Sir, if you tell these kind of calculations, already our mind not working. Now, if you do these kind of things, we will lose our confidence also, sir. So basic EPS.
I will try, sir. I will try, sir.
Very good. So basic EPS ho gaya 37,50,000 divided by 5 lakhs. Guys, everybody understand basic EPS or you want me to explain? If you understand basic EPS, say yes in the chat box. Bhargavi chala. Bhargavi, where are you from? Huh? There is one Bhargavi in the class. Where are you from? Looking at your surname, I know Andhra Pradesh. Which part of Andhra Pradesh? That is why I asked. Good tour. Super. So, shall we do with diluted EPS? Okay. What is diluted EPS? Basic EPS is equal to, can I say, net profit for the year divided by weighted average number of equity shares, which I call it for the classroom purpose like wins. Net profit for the year is nothing but PAT. PAT by wins. Is it right? PAT by wins. Okay, guys, is this right? So what is PAT here? 37 lakhs. 50,000. What is wins? Given in the question. 5 lakhs. So what is basic EPS? This 7.5. Now, can I say diluted EPS is equal to diluted EPS is equal to. So just what I need to do is here I need to do one adjustment. Adjusted divided by adjusted. That's all. Khatam. So what is the difference from basic EPS to diluted EPS? What is the difference? Numerator one adjustment is there. Denominator one adjustment is there. What is the adjustment? Simple. If the potential equity shares are converted into equity, step 1, what is the impact on numerator? It is one adjustment in the numerator. Step 2, what is the impact on the denominator? This is your step 2. Khatam. If you do this too, the answer is over. Now, what is the potential equity share we are speaking about? Convertible debentures if they are converted. What is this? If these convertible debentures are converted, then how many number of equity shares will increase? They have given in the question. Happy? They are not asking you to calculate. They have given already. Thank God. So can I say my denominator here would be 5 lakhs plus 55,000. Can I write here 5 lakhs plus 55,000 is equal to 5,55,000. Khatam. One adjustment is over. Now I need to know only another adjustment. Now, do you think, guys, do you think while calculating this net profit after tax, do you think I might have paid interest on debenture? I might have paid interest on debenture. On that tax benefit, I might have enjoyed. So what is adjusted profit? Can I say adjusted profit is 37,50,000 add back interest minus tax benefit on interest, or add back net interest? So take this profit 37,50,000, add back, because if these debentures are converted into equity shares, if I assume, see, what is the assumption? I am assuming that debentures will be converted into equity shares. That is the reason I am increasing the number of shares. So if the same assumption holds good, don't you think from tomorrow onwards, I don't need to pay interest? So that is savings to me. So how much of savings? Can I say 50,000 number of debentures into 100, that comes to 5 lakhs. 50,000 into 100, how much? 50 lakhs. Huh? 50,000 into 100, 50 lakhs. So 50 lakhs into 8%. 50 lakhs into 8%. 50 lakhs into 8 is 4 lakhs. So 4 lakhs will be saved plus 4 lakhs. 4 lakhs. But you know financial management also. You know that if you pay interest, there will be tax benefit, and if you are not paying interest tomorrow, you will lose the tax savings on interest. Tomorrow, these debentures are going to be equity shares. When these debentures will become equity shares, dividend is not tax deductible. So on this 4 lakhs, I am losing the 30% tax benefit. Do you agree with me? Do you agree with me? Minus 1,20,000. So basically, though I pay 4 lakhs, because I get 30% tax benefit, I effectively pay 2,80,000 only. So today I am effectively paying 2,80,000. From tomorrow, I don't need to pay that. So I'll be saving 2,80,000. So can you tell me what is this? 37,50,000 plus 4 lakhs minus 1,20,000. How much this is? Hello? Calculate and tell me, is it 40,30,000? Someone is saying. I don't know. Someone told, so I am believing it. Okay. So now 40,30,000 divided by 5,55,000. So is it 7.26? Diluted EPS, is it 7.26? Hello? You need to be very careful here. Why, you know? Sometimes there is a possibility that this bloody thing sometimes can be more than 7.5. Sir, is that possible? Yes. Mathematically possible. So because the present EPS has reduced, has fallen down, decreased, we call it diluted EPS. Imagine if it is going to be, say, for example, 7.68 rupees. For example, it is called anti-dilutive EPS, which should not be reported. Which should not be reported. Which should not be reported. Please be careful. But the Bhavan Sarathi's point is not there in a CA intermediate textbook. Sir, hello, they are asking so many things which are not there in CA inter textbook. That is the reason I'm telling you one additional point. If the diluted EPS you calculated is coming above basic EPS, that should not be reported. Then you have to write 7.68, which is more than, higher than the present EPS, basic EPS. This is called anti-dilutive EPS, which should not be reported as per AS20. Now, no problem, 7.5, 7.26. Let us see the answer. 7.5, correct. 7.26, correct. That's all. How anti-dilute is simple, Manish. See, Think mathematically. Manish is asking, give an example. Think mathematically. If this adjustment impact of this adjustment is not proportional to this adjustment. Now this is happening because see 7.5 has become 7.26 means the weight heaviness of the adjustment to numerator is lesser than that of denominator. Now imagine in this situation, company has given, instead of 55,000 shares, company has given only 10,000 shares because company shares value is very high. Then what will happen? 5 lakhs plus 10,000, 5 lakh 10,000 only, no? Then you write 5 lakh 10,000 here. Check, what is that? 7.9, khatam. In the question, they are issuing 55,000 shares for conversion of debentures. Now imagine if the company issues only 10,000 debentures, 10,000 shares, because company share is very highly valued, then this will happen. Anything is possible. Okay, so are we done for the day? Are we done for the day? Any doubts? Please ask me. I hope you enjoyed the class.